Hello, everyone, and welcome to our webinar. Today, we will be focusing on Payment Factory, a subject that we see coming up again and again as we go around talking to customers about Treasury and Treasury solutions. Today, we will be hearing from Kim Dowling, who is the head of our Treasury practice, will be leading our discussion. Also on the phone is Julio Dalla Costa, who's our Director of Technical Accounting, and we have our special guest, Haresh Chaya, who is the SAP product owner. So welcome. Oops. Today, just real quick, as always, we're going to do some quick housekeeping items. The webinar is being recorded. I get a lot of emails and phone calls about this. We are recording it. It will be up on our website very shortly, so feel free to go ahead and check that out. And you can ask questions throughout the webinar, and I encourage you to go ahead and do that. We'll do our best to answer them. If we don't answer your question, we will follow up with you in an email subsequent to that. Try to focus your questions on issues over whether SAP or whether there are issues and challenges as opposed to specifics. We're not going to talk about things like configuration or detailed product features, quote unquote. We'll leave those for later. You can download the previous webinars. I just talked about that from bramasol.com. You can see there are some banners up here at the top. You can click any of our key sections here. Just go right here to the Treasury section and you can access it. Our resource center has been redone to make things easier for you to find them. So if you just go to the resource center and use our tools to find and search, you can find those. And then as you scroll down the home page, you'll see all of our webinars. I'd like to encourage you to contact us through bramasol.com. Check us out. You can contact us here, check out our newsletters, join us on Facebook or LinkedIn. And then finally, I wanted to give a brief mention. The team here will be at the SAP Insider event 2020. It will be in beautiful Las Vegas and at the Bellagio. And if you haven't gone to the Bellagio, it's a great facility and there will be a ton of experts. I know Haresh on the phone is speaking. We are giving 4 talks at the event, so it's going to be a really great event, and I encourage all of you to check that out. Today's agenda will focus on an introduction, talk a little bit about what is a payment factory, and Kim will lead us through that. We'll talk about the benefits of payment factory and a little bit of interaction between Haresh, Julio, and the team here. And then, do you need a payment factory, and wrap it up. But what I thought I'd do is, just kind of introduce this a little bit. So why are we here? One of the reasons we're here, and I love this new slide, I just got this report from Deloitte, and I don't always like giving too much credit to the Big Four, but they did a really great job of looking at a global treasury survey. And this came out recently. And the reason we're here is to talk about the fact that most CFOs, 97% of the CFOs that Deloitte surveyed in large corporations and small corporations saw that liquidity risk management is a big deal, and Payment Factory will help you with that. Further, they talked about low-cost, efficient provider of services and being able to do Payment Factory and save money and use the tools that are available help with that. Again, scalability. How are you going to scale globally if you have individual payment centers and AR centers, et cetera? And finally, we'll talk a little bit about enhanced governance. So I thought this was a really great thing to stick in here because I think it adds relevance to our conversation today. So with that, I'm going to turn it over to my friend and colleague, Kim Dowling. Kim, why don't you talk a little bit about and take us through Payment Factory and what's it all about?
Thank you, John. Welcome everybody to our webinar today. So I wanted to start off in the beginning here is, one of the reasons that we're talking about Payment Factory today. And when I first look at this, first thing that comes to my mind is in order for our business to be successful, it's really critical to know where your cash is. Of course, we all say that. And how much cash do you have? Where is it? Because if you don't have control of your cash, you might not know if you've been paid by your customers, you can't pay your bills, you can't fund your business properly, you're losing investment opportunities, up to 40 basis points to some of our customers we've heard, or you might not know if your cash is, you might not be at risk you could be at risk of losing it. So improving your payments and cash management is a consistent challenge for organizations, and it gets more complicated as you can imagine, as you're growing globally. So we're going to get into a little bit more detail on some of the definitions later in the conversation today. But I wanted to say that, the better that you can handle your cash, the more successful that your business will be. So in my mind, cash is king. So a payment factory is going to look at, managing your cash and eliminating some of these critical concerns. So, but before we get into some of the more details, I wanted to start with some of the basic definitions, which we'll get started on. So if you're going to be, a lot of times I'll hear, if you ask this question about what is a payment factory, you're going to get different answers. And that's because everybody looks at a payment factory a little differently in the way that they may be implementing it to fit their needs. It's not one size fits all. It's a process that works for you and your business. So payment factories can process all your payments, incoming and outgoing. That's your treasury related type payments that you may have, your investments and your hedging and so forth. It may be your vendor payments. It will also can include your customer payments, all the different direct debits that you have, your checks, and so forth. It doesn't mean that you're also just in one area. You could have your payment factory incorporated across your globe, like I have had in the companies that I've worked through, large pharmaceutical companies, where you may be centralizing it within the US, you may have some centralization within Europe and so forth. So you may be looking at, wondering, why do we use the term payment factory? It's not exactly that intuitive when you first heard the words payment factory. But if you really think of the payment factories as a central location, if you will, where your operation performed in a standardized and automated fashion, you might start to begin to make sense of the word payment factory. Because payment factories are really going to help you make it easier for companies to increase that efficiency and gain that visibility into their cash position by centralizing that information, streamlining it, and standardize it across their enterprise. So let's look a little bit further. And as you see with this pictorial, you'll see where we're trying to merge together internal and external processes. So when we get into, as I just talked about, payment factory is a combination of your shared services in your in-house bank. We look at, okay, so what's the shared services? Well, it's an operating model that's going to be used to consolidate and deliver your services across your multiple divisions, but it's going to be looking at this to make your businesses more efficient and more effective, and looking at standardize those processes and removing that work from your individual business units, but also provide that straight through, reduce costs, and improve services across your globe. Julio, I was wondering if you wanted to share some of your thoughts, since you've been, as a practitioner, as well as what you've been working with a lot of our customers a lot, and some of your thoughts on how shared services work and what you've seen.
Yes, Kim, thank you for bringing me in. But I think from a shared services perspective, there's different ways to do it. From my experience, a lot of companies, especially now with the economy, the way it's going, they want to bring in and centralize services, and they want to lower their costs. That's the main driver for what we've seen. Companies are interested in lowering their costs, but in that lowering cost model, you also have, like you were saying before, greater efficiencies. And most importantly, and related to Treasury, what we're talking about is it's a catalyst for business process change. When you have a chance to centralize, whether it be accounts payable, accounts receivable, or whatever shared service that you're doing on behalf of other subsidiaries, whether it be regional or by process, you really have that interval where you're looking and saying, can we make this process better? And when we say better, we mean more efficient, which is going to lead to more improved productivity. So those are some really drivers that companies that we talk to all the time and we see in the workplace that are driving this move towards a shared service environment. Kim?
Yes, thank you, Julio. And Haresh, I wanted to actually get some of your input on this as well, since you've seen a lot of this shared services type arrangements in your time.
Sure, Kim. Thank you for that opportunity. At SAP, we deal with many large corporations as well as mid-sized and small corporations. And as Kim was pointing out, one size does not fit everybody. And when you talk about centralization, it's possible that it could be parts of the organization which are centralized under a broader centralization strategy, but they may still be operating regionally. It's a very common scenario we see with many companies doing so. And coming to what Julio was referring to around the benefits of shared services, there are a lot of capabilities which are available on SAP platform, which allow you to run centralized processes in a much more efficient way. And I'll give you some examples. There are some newer technologies that have been launched in the last several quarters, which allow you to manage your, for example, receivables process in a much more efficient way by letting machine do some of the thinking for you so that you can focus your time out of the routine activities into more strategic activities. And the particular use case I'm referring to is cash application, where system can learn from the past experience as well as user inputs and keep learning constantly and updating the rule sets that it needs to apply to newer situations around using information in the bank statements. And that actually drives better output and throughput through the shared services structure that you may have in place. This is just one of the examples. There are many other examples where such machine learning and automated processing can help run these processes even more efficiently. Kim, back to you.
Thank you, Haresh and Julio. So going on to our next, so basically you're getting the best of both worlds here. So going on further, what is an in-house bank, which was, as I said, when we're looking at a payment factory, we're talking about combining the benefits of a shared services as well as an in-house bank. I've listed a couple of items that an in-house bank enables here within the box to the far left. So as you see, the in-house bank is really an integral part of the organization, and it acts like the common bank for the parent, individual subsidiaries, really utilizing a virtual bank account, if you will, to execute our third-party and intercompany payments on behalf of the entities. So by bringing in these shared services together with the payment factories, they significantly actually help to streamline your multifaceted business processes related to all your global payments, your cash management, and delivering a lot of benefits to your organization. And so in essence, you're also drastically reducing your number of bank accounts. As an example, one bank account can serve many subsidiaries here. So you're basically bringing that significantly reduced transaction costs, including even your FX fees, because your transactions and you're dealing with foreign exchange flows, payments that you can be actually treated as domestic rather than foreign. And this can actually be set up with a straight through processing all the way from your accounting straight through to your settlement. And we can move on to the next slide. Excuse me. So looking at some of our benefits, I've listed a few benefits that come to my mind of importance for the benefits of your centralization and your standardization with looking at the in-house bank and payment factories. So your centralization, standardization, your payment processing, it's going to be streamlining that effectiveness and having your control over your funds. You just increase your visibility. You have reduction in duplication of efforts, reduce your costs. You have better cash management, your processing and risk mitigation. You improved your controls over the master bank information. And not just rationalization your bank partners, you're actually also enabled you to be able to work with one to just a few banks, effectively reducing all those transaction costs that we talked about earlier with your bank fees and your charges and so forth. Move on to the next.
Yeah, Kim, real quick comment from us. You know, we did a webinar last month about, you know, some of the benefits of standardization and centralization.
Mm-hmm. Yes, we did.
And it's really great. Can you talk for a moment maybe, or hit on some of those ROI measures? We talked about not just, you know, the simple pieces. Of course, you can reduce your banking fees, right? But there's a lot of other ROIs that you can get benefit from pretty quickly. Can you just touch on that for a second?
Sure. Let me think about it. Now, when you're looking back and you're saying, now I have streamlining my processes. It's not just about reducing your bank footprint and the amount of bank accounts that you have to have open, your fees. Of course, now you have that visibility and you know where your cash is. You can have better opportunity to look at, well, now that I see my cash, I may not be leaving as much on the table with my bank accounts because I can better utilize my cash. I can go to the market quicker, and you can probably gain quite a few basis points, 30, 40 basis points if you have that visibility to go into the market and start doing those investments. You can have better ability to fund your different entities for the different payments that you're going to be needing very quickly and very agilely instead of just leaving all that money on the table, as we talked about the last time we had this webinar. And those are some of the things that I see of returning having your return on your investment rather quickly now that you have that visibility. I mean, think about even your exposures. Now you can see your exposures if you do straight through processing, and you know exactly what you're going to be doing with your hedging strategy. Those are some of the items that come near and dear to my heart.
Okay. So we talk about automation.
Yes, this is an interesting one because when you're looking at the benefits of the automation, as we spoke to, it's not just about the standardization and streamlining. Now we're automating. So now with this automation of the straight-through processing, you've got Treasury now has their focus on their cash management. They have real-time visibility, as I just talked about. We're able to quickly react to the changing business conditions to achieve the future growth. Think about it. Now I can actually integrate my acquisitions really quickly without having to say, sorry, stop the presses. I have to add a new bank account. We have a new company we're buying. How are we going to do this? And everybody's stressing over how you're going to easily bring in your different companies that you just purchased. And more important is also you're meeting your audit and compliance requirements and being able to tighten those controls. Now with that predefined and controlled end-to-end processes, you have now your separation of duties are enforced. You've got your workflow approvals. You've standardized who's touching those payments. They're pre-authorized. It allows you all that, meeting those strengths and controls. Now, I wanted to talk about this a little bit more because, Haresh, we were talking earlier today about, again, how this machine learning and AE can actually help drive this automation.
Yeah, so as I was referring to some of the use cases earlier, we already have some use cases such as cash application or GRIR processes, which are available to our customers, and actually they're very hot-selling products from SAP. We are also having several other use cases on the roadmap, and something relevant to treasurers or the cash managers on the call is being able to simulate your forecast based on a variety of parameters. And that is an important aspect because a lot of times forecast is not a firm number. It varies. It depends on how accurately you're getting information from different sources, how well vetted that information is, and so on and so forth. And if you have SAP's machine learning technology helping you in bringing more accuracy and predictability to your forecast, that is a very big advantage. Same way, if you are thinking about making better hedges, which are compliant and you're hedging your risk more effectively, if system can help you and maybe make some proposals as to what the right hedge could be, looking at a variety of things behind the scenes for you, then that is a huge value add for risk management. So these are different scenarios that are possible as we start to talk about machine learning and artificial intelligence. And these are not too far away on the horizon.
Sure.
Yeah.
Yeah. Let me change gears for a minute because a question came up, and I've thought about this myself. We talk about in-house banking. How does that relate, Haresh and Kim, to the concepts of cash pooling? Right. To me, it's sort of hand in glove or hand in hand. They both go together. But maybe you can talk for a moment about how you see Payment Factory, in-house banking, and cash pooling work together.
Haresh, you want to add to that one?
Yeah, sure. So, different companies run different processes around cash pooling, and they also use different terminology. Some companies use notional pooling, some companies use cash concentration as a term. But in a nutshell, when you talk about cash concentration, you're talking about rolling up cash into a central place where you have better visibility and control, and probably you're getting better return on the cash at hand. And when you bring it in the context of in-house cash, you can actually have arrangements with your bank to do certain process steps regarding cash concentration, and you can roll them into your in-house banking setup so that you have better visibility and instant control over the data that is being generated as a result of concentration activities. Of course, it does involve you to align with the structures, the bank account structures, and so on that you have established with your bank, but you can run these two in parallel and get better control over your cash.
Right, and also taking into consideration our various, every country may have different rules and regulations or tax consequences that you have to take in consideration as well.
That is correct. That's why the same formula of in-house bank does not apply to all parts of the world. This goes hand in hand with your tax requirements. It is more common in the western part of the hemisphere than on the eastern part of the hemisphere, but it is still pretty common.
Right. So,
And I
you
think
know,
also
yeah.
it
Go ahead.
sounds to me like it's also, yeah, it sounds to me also, Haresh and Kim, like in-house, cash pooling is also part of the equation in
Mhm.
looking at in-house banking and then as a consequence payment factory. It's very similar to what when we talk about managing cash and managing your cash position, there are fundamental areas to consider in that. And this is one of the ones from a cash pooling as you look at payment factory or in-house banking, the cash pooling is part of that equation. So
Right, and
makes
same thing
sense.
with intercompany netting as well. It's all
Yes.
interrelated. So a lot of what I find is that, we get together as a company, or what you're always getting together, your accounting standards and tax and in Treasury, and getting together and looking through the landscape of the company, well, the different rules and regulations are, and what makes best sense for the company, where it's going to give you your better return on investment. What can you and what can you not do, and then how can we make this process work to be as most efficient as possible. And it's going to be different depending on each company has its different nuances that you have to take in consideration. It's definitely not a one size fits all. In some cases, it makes it much more interesting, but it's very critical to look at the process and what makes sense for you. I wanted to also highlight a few other benefits, especially as it relates to your improved risk and controls. I wanted to call them out a little bit separately, even though we touched upon this a little bit throughout our conversation today. But with the implementation of the payment factory, you will be transforming from more of a manual or semi-manual process to more fully automated processes, getting that full visibility of your straight-through processing throughout the whole life cycle. And a couple of things that I wanted to highlight was look at secure multi-bank connectivity. That's one of the items that SAP does offer that, and some other, I know a couple other folks out there that you can actually do the multi-bank type connectivity, but it removes a lot of risk and eliminates a lot of your errors where you're not actually having to maintain those separate direct interfaces directly with your bank. And it also allows you that flexibility as you may want to add or switch out banks. So that's one of the things that I like to look at. And it gives you that secure integration with your ERP, and your banks are now being forced to adapt and standardize, helping to integrate those solutions. So it's much more easily for you to actually use the AI and the machine learning to have that straight through processing. And then you also have your strengthening of your internal controls and your elimination of your disparate manual processes, because now with that, eliminating that poor data quality and unreliability, your cash visibility, now you've got that straight through real-time visibility of your cash flows, enables your ability to control and monitor your payments better. But I wanted to talk more on your strengthening and internal controls. It's always near and dear to my heart because I don't think I've ever gotten away from SOX my whole career as a practitioner. And Julio, who is our audit and control person for our company, I wanted you to talk a little bit more about this as well, Julio, on the strength of our internal controls.
Yes, Kim. So as a former program manager for Sarbanes-Oxley myself, this is dear to my heart as well. So, obviously when you implement a new process, whether it be shared services, you do a payment factory, somebody in the background is asking themselves, especially the internal auditors, the external auditors, does this program or this new process comply with your internal controls, especially for public companies out there? You want to make sure that your new program is in compliance with Sarbanes-Oxley. So with a payment factory, once you have that global visibility, but from a compliance perspective, what you talked about, Kim, was really having that standardization of your approval process. You now have a workflow. The workflow is going to automatically embed your segregation of duties. So that means that the person who is initiating the transaction cannot approve the transaction because the system, once set up correctly and configured correctly, will not allow that. That alone is a major part of your Sarbanes-Oxley process, where you're making sure that you have a repeatable, standardized process. You have all the players involved so that your initiator is separate from your approver. And then you have all that recording, especially in SAP, of who did what. And that's going to be very helpful when you have whether you have a Sarbanes-Oxley audit, you have a global IS audit, to seeing who is approving, who is initiating these transactions. And then lastly, you have a review control, which is a compensating control. So beyond the initiator and approver, you also have a review function where you have this global visibility of who's doing what, which will give a lot of comfort to your processes, especially your external auditors, especially your Sarbanes-Oxley sign off at the end of the year every quarter. Kim, does that make sense to you?
Yeah, it does. And also the other thing that might come to some people's mind, which popped into my mind, is when I'm looking at standardizing the approval processes, you're also probably, your auditors are like, well, you know, what are your limits? Your limits on the various, you know, you may have, some companies may have much smaller limits that they have a dual approval. So you actually may be also incorporating into these processes dual approval based on the limits that you want to have approvals for different levels throughout your company, where your treasurer or your CFO may have to approve much higher limits than the smaller values.
That's an excellent point, Kim. I think, you know, we've seen in the past where some CFOs are approving all transactions over $500, and where we've recommended, well, maybe that's too low for them. And, you know, as you go through, that's the whole beauty of doing these new processes, is that you start looking at your process from beginning to end and say, how can we improve this? How can we make it more efficient and effective for our organization? And, you know, when you have a CFO approving something at $500, you say, well, maybe we should push him or her up to maybe $100,000. So you have, let him do his work and then go from there and improve your process. So this is a great example of how we can do a process improvement as we go along to these new processes. Okay?
And having the flexibility to do so as well.
Exactly.
Okay, we can go on to the next. So the next two slides, I wanted to show a pictorial of what it may look like without a payment factory, and then the next one we'll talk about in a second is with a payment factory. And this slide reminded me when I first set up my first setup of, you know, making payments within a large ERP system for a large global company. When we first attacked it, we were like, yes, each subsidiary has its own bank account, each subsidiary manages its own intercompany payments going through, each subsidiary manages its own, you know, vendor payments and customer receipts. You know, and the cash is either held at subsidiary level with limited visibility, or you may actually concentrate it. So in this case, you're seeing here that you're having a separate bank account for each one of your entities, which could be by currency. You could have more than one currencies, but then you're having your straight through, of course, your ERP and your banking. But the thing is, you have many bank accounts here by entity, which may not be as efficient for you. So going on to the next, where thank you, is that with the payment factory, you're going to see where it's more centralized, where in this case, of course, this is more of a real in-house bank type, where your in-house bank entity is owning your bank accounts, and all the flows are centralized through your in-house bank. So your payments are executed by the in-house bank on behalf of your subsidiaries, where you're going to be debiting your subsidiaries in the current accounts, not cash. And the same thing on your receivable side, where you're going to be collecting on the behalf of your in-house cash. Your in-house bank is going to be collecting on the behalf of your subsidiaries and crediting to the subsidiaries. Well, intercompany, you're not going to have any flows through the banking system because there's simply going to be book transfers between the subsidiaries with the in-house bank. And again, your cash is held at the in-house bank. So now you have that greater visibility to the group, allowing more productive usage of your pooled resources. So you don't have all these separate bank accounts for every single entity. You can streamline this collection and payment processes. And it's not just for AR and AP. This also could be within your treasury processing as well. And it doesn't have to be just one in-house bank. You could actually be having your, you know, you could have your central resources with whatever makes sense for following the sun. Within Europe, you might have it within Asia, within the US. But again, you're streamlining and centralizing those processes and making them much more efficient. That's the whole crux of what you're trying to do here. So our payment factories can be deployed using many different types of levels of integration. And the level of integration is really depending on, you know, what's your organization's requirements? You know, what's your global footprint? What's your technical readiness? So, and one thing I wanted to point out, which I think is really cool, which we've been doing quite a bit of lately, which goes hand in hand with this. You may have heard the words POBO, P-O-B-O, which is payments on behalf of. So this is initiating like payments on behalf of type scenario, or you may have heard the word ROBO, R-O-B-O, which is receipts on the behalf of. So this in essence is what we're talking about here, is payments executed on behalf of and receivables on the behalf of. Okay. In this slide, what I wanted to highlight here is that, you know, what a payment factory is not. And it's not, and as we've been covering today, it does not eliminate your need to test your internal and external controls. It's actually helping you facilitate your ability to have much more tightened internal and external controls, and to have the ability to actually test them more effectively and efficiently. And it's not intending to perform your treasury-related activities itself. It's actually a process that's helping you enable your visibility to perform in a more robust and effective manner your investments and hedging for your company by having that straight through processing and visibility of your cash. Okay. I like this slide because I'm always hearing all kinds of interesting things, and we're talking about payment factories, in-house cash, and all the different, you know, flavors of words that you may hear out that. And here's some of the items that I hear on a regular basis. One being, it's very resource intensive. I'm like, resource intensive, we just actually standardize and streamline your processes. So a lot of the resources that it takes to actually process your payments is all fully automated end to end. So in essence, you're actually eliminated a lot of your resources that you have to have all the different touch points. So it's made it much more streamlined. Or I've heard that it's very time consuming. Well, you have straight through processing and you build in the rules within your ERP system, you actually are eliminating the time that it takes to actually process your payments or receivables or your treasury related type payments. And you actually now have given yourself that visibility that you need over where your money is, so you can make much quicker decisions on how you want to invest your money, how you want to handle your hedging strategies, or the effectiveness of your receivables that you have coming into your company and so forth, or making better use of your payments and your discounts related to your payments. And second, I've heard that it's been very disruptive or very inflexible. And this is where I would like Haresh to talk a little bit more about Treasury and the cloud and so forth, and what he's seen with how SAP has actually helped resolve these issues as well.
So I think this is where, you know, the approach to how you go about implementing these solutions and what you ultimately target for comes in. So, you know, it can be as flexible as you want it to be if you are following the standard delivered best practices, and also targeting to fit to the standard model. Then it is quite flexible because it's built to scale, and you can always scale your operations. You can acquire a new company, maybe add new bank accounts in the in-house banking center. All those processes are pretty handy and simple for any treasury organization. Now, of course, if you have done a lot of customization, which is not a standard practice, then you might end up into situations where you may have to adjust your solution on a regular basis to scale. So I think it is all up to you. If you take the approach of standardized functionality, then it is quite more flexible and scalable.
Thank you, Haresh. And then lastly, I've heard, oh gosh, it's so expensive. Well, if you think about it, within the systems that we're talking about in SAP and your ERP, the tools and the processes are already there. It's a matter of setting up your rules and streamlining your processes. So in essence, when you're standardizing your processes into maybe one or two central different areas, you're actually reducing the cost that it would take for all your different touch points to process your payments, your receivables, your treasury related activities. It's, you know, you're standardizing it, centralized, so, and it's not that expensive. And also the fact that you've just actually saved yourself a lot of money and increased your return on investment. So in essence, it ends up paying for itself in the end of the day. So I don't see it to be an expensive process. And, you know, you've eliminated your bank account, eliminating a lot of your fees, eliminating your touch points. If you pull all those those benefits together that you're getting out of that, you're going to be seeing that it's really not as expensive as people may think. So now that we know more what a payment factory is and what a payment factory is not from the conversations we've had so far today, is that, folks, you may be looking at, so who needs it and what type of business factors I might want to consider if this makes sense for me. And when we picked a couple different points that were, made sense as to things you might want to think about as to, is this right for me? And if you're in a situation where you have a diverse global operations, you're looking at different changing compliant requirements, you're looking at different regional and local regulatory mandates, you're looking at dealing with international trade or foreign currency issues, or you're very geographically diverse, is something that you may want to consider. And of course, that would also, in the cases where you have multiple bank partners and accounts, where you may have non-standard bank connections, you may have loss of visibility, and in particular in your controls, or you've had some opportunities for fraud, then you may want to be considering a payment factory to help streamline your processes and put better controls around your payments throughout your company. When I say payments, I'm not just talking about AP payments. I'm talking about payables, receivables, treasury-related payments, any kind of money flows inside or out, including your intercompany.
And Kim, in the compliance requirements, I think there's a new one coming up called SAFTI, and that is in Europe, where you are seeing that the governments are now requiring almost instantaneous payment of the various VATs and tax payments, whether they're use taxes, VAT taxes, etc. And without a payment factory methodology or centralized process, this can become very onerous. And that's an example of a place where certainly companies like Bramasol, but SAP can bring a lot of benefit to helping you with that.
Yeah, that makes that a lot more difficult when you're having to comply with the tax regulations, especially that quickly of a turnaround. If you don't have that straight through processing it and can't just on a dime incorporate the tax within your payments, it makes it very difficult to comply.
Yep.
Okay. So payment factories do offer a lot of very powerful benefits, as we talked about today. But I think it's very important that as you're embarking upon looking at if a payment factory works for you, again, using that term loosely because it has a lot of different meanings and a lot of different aspects of how you're making your payments or netting or pooling or whatever you may be doing. But I think it's very important that you're very clear on the scope and the major considerations to ensure that you have a successful implementation. I've listed a few items here that I think are very important to be very aware of and to make sure that you're clear on. One being ensuring that you're securing your controls and standardization of your processing to make sure your internal controls are implemented properly with the proper separation of duties and approvals, as well as having the ability to have a flexible workflow so that in case that you have to have different levels of approvals based on the size of your company, and of course ensuring that you have that visibility end to end. I think it's really important to make sure you streamline your global payments, and then you can actually reduce some of those the cost of routing those payments. Multi-bank connectivity. What I like about the multi-bank connectivity, there's different ways to do this, but when you're looking for that flexibility to, instead of maybe using 2 or 3 banks, maybe you need in some of your other countries that you may be dealing with, you may need to bring on some other banks you need to have that flexibility to easily add or to eliminate different banks as you're growing within your business over time. It's very difficult to maintain those separate bank-to-bank interfaces, and as they change, to be quickly being able to update them as different factors come in with the different rules and regulations, SAFTI or whatever, that you don't have to be worrying about how am I going to reduce, how am I going to maintain this interface, how much is it going to cost me. I have to do it really quickly, and having that worry about those connectivity problems. Also, very, very important for prevention of fraud, having that real-time alerting and investigation. So if a payment doesn't reconcile as you expected, or coming in or going out the door, then you have that ability to look at that alert so you can spend that time working through to find out why it didn't match up and what was going on. So, but with that closed loop automation, that end-to-end visibility, the end-to-end approval process, you've actually worked on that whole process end-to-end of preventing any kind of possible issues that may come up with fraud or financial crime. Having the automated reconciliation transparency is very important. How is that going to work for you? What is that process going to look like? Here's the process. How is my system going to be able to automatically be able to match up my payments and perform my accounting straight through and if I need to do further investigation, how am I going to see that? How am I going to know if something doesn't match up? And then, of course, looking at your banking strategy, looking by having those fewer banking connections and being able to have not to worry about maintaining as many technical requirements with all the different file formats that you have to deal with, the different types of payments that you make.
Yeah,
check, ACH.
In the prevention of fraud or financial crime, I think there's an interesting aspect that SAP brings to the table, and maybe Haresh, you can comment on this quickly, but SAP has a great tool. Companies want to move away from responding to fraud or responding to crime and really being able to predict or look at it. And I think SAP has a great tool. It's called Business Integrity Screener. Haresh, are you familiar with that, and can you comment quickly?
Yeah, sure. So Business Integrity Screener is part of our GRC portfolio of solutions. And what it essentially does is it is looking at several rule sets, and it is screening the payments as they're being processed. So if somebody is making an AP payment, you can actually establish some rules that systems should always look for deviations from. And if there is a deviation, it's going to hold back that payment for you rather than you having to find out after the fact that payment went to a wrong place or somebody mistakenly or intentionally did something wrong. So there are quite a few tools available. Different scenarios need slightly different approaches, but they're all part of the broader S/4HANA solutions that we offer.
Yeah, and the reason I brought it up is when Kim was talking, it occurred to me, when you implement something like a payment factory that centralizes these transactions and gives you the volume of transactions, but also the focal point for those transactions, a tool like BIS can be used to help prevent crime as opposed to, reacting to it. So it was just something, I just think it's a great addition to that process.
Yeah, to be preventive versus reactive.
All right.
Mm-hmm. One last point that I wanted to mention as well, and before you start embarking on a successful payment factory, it doesn't matter if you're doing a payment factory or you're doing any kind of process improvement or system implementation, change management is going to be critical for the successful implementation. It's really important that the business is looking at this and the scope of the project that you're trying to look at, that everybody's in agreement as to the direction that you're going into, and the folks understand what the benefits are to them, how this is going to help them. And yes, change is big, but how is this change going to impact them? How is it going to make their life better? And to make sure that whole change management perspective is taken in consideration and spend the proper time on that to make sure everybody's on board, so it's more of a successful, easy implementation instead of a battle to get it implemented. I also think it's very important that you bring in the expertise in understanding your business process and what your needs are, and that they look at business process first, meeting your requirements and your needs as a business, and then look at building in the technical solution to meet your needs. Process first, then technology. Okay, I would like to actually now get into some potential scenarios and some use cases that can be considered during your journey in a payment factory. So I'd like to now have Haresh, who owns our SAP Treasury products, to get a little bit more into the different use cases that are available through SAP.
Sure, thank you, Kim. And there's a lot behind these scenarios, but what I wanted to do is just give you the lay of the land as to what is possible when you consider the payment factory solutions from SAP. So there are two major buckets under which you can run your payment factory. One is where you are utilizing in-house banking along with Payment Factory solution. The second one is just pure Payment Factory. Some companies do not really need in-house bank because they really don't look at their cash in that way in a centralized in-house bank or in-house cash center. There are some legal requirements as well. As I was describing earlier, in some countries you cannot technically you cannot have an in-house bank set up because of the legal regulations limiting it. Mm-hmm. In which case you can always benefit from your advanced payment management functionality, which is what these scenarios are describing. So I'm going to go through 1 through 4 really quick and talk about what they mean. So scenario number 1 is what we call payment in the name of. You could have any number of sources generating payments. Could be your AP system, could be your acquired company, which is not yet on S4, could be your HR system, which may or may not be SAP. You can just name it. Any system can be generating payment, which can be routed through advanced payment management capability, which was added in 1909 version of SAP, which got released a couple of months ago. And you can manage these payments in a centralized way through a shared service center, where it can actually do a lot of things for you. It can manage the sources. So as I said, if you have multiple sources, you can centralize all the payments from all the sources into a centralized place so that you can enrich them. You can put some validation on top of them. You can decide how they need to be cleared. If they're wired, they need to go urgently. If they are ACS, they can wait for the next cutoff time, and so on and so forth. You can manage exceptions arising of these payments from all these different sources. And it also connects with your cash management and other capabilities natively. So that's scenario number 1. Scenario number 2 is, again, payment in the name of, but you're making some routing decisions within your advanced payment management capability. So your source systems could be sending you payments, which could be Excel, which could be text file, which could be multiple formats. You can bring them over into advanced payment management solution, where you can apply additional rules around enrichment, around routing, clearing, and so on. And based on multiple criteria that is in the payment file, you can decide where the payments should go. Should they go to Bank 1 because they're urgent and the Bank 1 is very effective in making urgent payments, or they should go to Bank 2 where certain other capabilities are offered. So it can really make that decision for you within the advanced payment management capability. In essence, what you're able to do in scenarios 1 and 2 is have these payments generated from different sources or a single source in different formats or a single format, bring them over an advanced payment management tool, and make a variety of decisions around making the data quality better, routing, clearing, and exception management. And then you can send them out to the external entities, which in this case are banks. You're not utilizing in-house banking in scenario 1 and 2. But when you come down to scenario 3 and 4, now you are using the same advanced payment management capabilities which I just described around validation, enrichment, routing, clearing, exception management, and so on, along with your in-house banking functions. Now this adds another whole new dimension of capability on top, which means now you can centralize your cash management activities. You can do some intercompany funding because you don't have to go outside to make external payments when you really don't need to. Of course, you cannot eliminate them completely because and banks are a key player in interacting with the outside world. But there are scenarios and situations where you'd like to manage your cash in-house, and these are the scenarios where either you can have internal payments, so company 1 making a payment to company 2 within the in-house bank, or scenario number 4 where you are centralizing your payment operations under the payment on behalf of scenario that Kim was referring to. You are utilizing the combination of in-house cash and advanced payment management in 3 and 4. So quite a new set of capabilities that are added with the addition of advanced payment management on top of in-house bank. Can we go to the next one? And this is just a quick summary of what I was just highlighting, all the things that advanced payment factory model can do for you. You can centralize the payments, it's real time, there's content validation and control. You can process very high throughput through this, and this is becoming more and more important as companies are becoming more and more service-oriented, where I just think of the example where I use cloud service from Apple, and they charge me $3.99 for some cloud space. And this is a routine transaction. Think how many of these Apple is processing every month? Hundreds of millions, I would think. And the Advanced Payment Manager is capable to handle such large volumes of transactions as well. Then there's exception management, which I spoke about. You can set up several rules which allow you to manage all kinds of exceptions, route them to the owners, and have them address the exceptions. Monitoring, reporting, and analytics. This is another key element. So you can really manage the payment traffic across your company through this tool. It can give you graphical as well as detailed table formatted information. As we talked about in-house banking, you can actually tie this Advanced Payment Management solution along with your in-house banking processes. Automation, of course, it allows you to automate the process end-to-end, start to finish. Message routing, we talked about that. Format handling. Again, SAP is trying to lead in with the ISO formats, but it is not the limiting factor. If you have arrangements with your banks where you absolutely need to use other formats, this tool will allow you to process your transactions in other formats than ISO. And then payment centralization. This is, of course, the overarching benefit of using this tool set. With that, I'll hand it back to Kim.
Okay, thanks, Haresh. Haresh, I was wondering if you wanted to get into some of your use cases. Did you want to show them online, or were you going to?
No, I think those are the 4 use cases that are relevant for this.
Okay, very good.
And
I
would like to take that message, right? The message is you can use advanced payment management all by itself to centralize your payment operations, or you can use it in conjunction with in-house cash solution, where you add the added capability of having an in-house bank within your organization.
Excellent, thank you.
The valid.
Okay. So I was actually going to now actually have John wrap up the conversation with how we get started with our recommended approach.
Thank you, Kim. And we've been engaging with a number of customers. So first off, I want to thank Haresh and Kim. Terrific job. I certainly learned a lot myself. Hopefully everybody on the phone did as well. From a Bramasol SAP perspective, we recommend the first thing that you do is do an assessment. Look at what you can do from the opportunities for ROI improvement, efficiency, or cost. This is all about really sitting down, looking at what you're doing today, how you do it, and imagining a world in which you could do things seamlessly, straight through processing. What would you envision? And really assessing where you are today and where you want to go. Then you move to creating this multi-phase roadmap that focuses on initial wins. We like to use the framework, and a lot of our colleagues are using this framework called Comply, Optimize, and Transform. And really, it came out of the idea of initially looking at the ASC 606 and for RevRec and leasing and IFRS 9 compliance. But what it really is all about is setting up a plan in which you look at to start with your transactional excellence, making sure that you have the tools in place to ensure that the transactions you do are the right ones with the right amounts, booked to the right places in your GL, and are compliant with the key regulations, whether it's, as Julio mentioned, ICFR, so your internal controls for financial reporting, whether it has to do with SOX, et cetera, that you comply. Once you've done that, you can begin to look at things like Payment Factory. How do I optimize my processes? How do I look to gain efficiencies and automate those processes and optimize the benefit? And finally, you move into, and we'll be talking about this in future webcasts and webinars with Haresh and the team about transformation. And that begins to think about tools such as machine learning and AI, but also some of the great tools that SAP and others have brought to the table around automated market exposures and looking at your cash exposure, your market exposure, your debt exposures, and really beginning to manage those proactively. And we'll talk in a minute about using a fit to standard. But the idea is start now. Begin the process, do an assessment, We have a multi-phase road mapping process that we do with customers. We've done a few of them. We encourage you to reach out to us and we can help you do that. But when we talk about this concept of fit to standard, what do we mean? In the traditional world, we take a fit to purpose approach. This focuses on customization and fitting the solution to the company's unique processes. What does that mean? The approach is I take a look at all of my processes and I go through and outline, for any of you who've done this before, outline every single tiny process that I have and then adapt the software. It requires deep discovery on existing processes and requires a long discovery process. And the approach is from the perspective of how am I unique or different? We recommend that you focus on a why not best practices. Take a look at the SAP best practices. Take a look at the best practices. AR is AR, AP is AP in general. You should be able to use those and adapt those and understand how they work for you, and then make some small changes where you need to. Because it involves an agile approach, it gives you an early view of the software and how it works with rapid deployment. We roll these out using the SAP, using our Ignite methodology based on the SAP Activate methodology. But we recommend that you take a look and we do scenarios. We do an agile so that we give you a view of the software. We augment it or adapt it or configure it, and then you say, does that work or not work? And so it gives acceleration to the process. And we find that the discovery phases are much shorter and adoption of the product is better. And finally, the approach is to leverage best practices for common processes and focus on your true differentiators. There are companies like Amazon who accounts receivable is similar for them. Their payables are fairly similar, but what's really differentiates them is their provisioning and how they deliver, how they make that difference. For others, it's about the CRM process and the customer process. Focus on those. Use your ERP to help you get the advantage. For others who it's about commodities, create a baseline of foundation that's fit to standard and use SAP or other tools to allow you your true differentiators. So in our assessment, we ask a number of questions. I won't go into all of these, but we focus on things like the number of banks and bank accounts. We look at things like the volumes of payments. What are your sources of cash? Do you feel you have control over the approvals and authorizations? Note that when we focus on this process, it's designed to get key factors to evaluate the complexity of your organization's payment and collection processes. This is not about technology. Technology is the enabler. It's all about understanding and looking at your processes and how you run those and helping you become better in the idea of the comply, optimize, and transform framework. Kim, did you want to make any comments? You've done this in a lot of organizations. Any thoughts before we wrap up?
No, this pretty much covers it, but a lot of times when we're going to go in, anytime I've ever gone in, either when I was working as for the companies I've worked for or as in my consulting experience, you really want to make sure you understand what the current processes of the company, where they're trying to go. So you can look to see why not use standard best practices, what is different, and to be able to come up with an approach that works best for them, and then that is more standardized versus customized, and then technology will follow.
Yep, agreed. So let me wrap up. We heard about what is a payment factory. A payment factory is a centralized set of cash management processes that are standardized and automated. It brings together the benefits of shared services and in-house bank. There are 4 different scenarios that we heard Haresh talk specifically about, where you can use it in combination with in-house cash. So either doing it in advanced payment management in a standalone, if you will, scenario where you can't utilize or in-house cash doesn't make sense, or in a scenario where in-house cash and you can leverage all of that. The benefits, of course, are centralization and standardization, and that leads you to the ability to do automation. By centralizing and standardizing, not only can you save money and save time, but you can take advantage of the tools for automation, whether it's the machine learning tools that Haresh talked about around cash application, automated banking reconciliation, or any of those tools. By using a payment factory or a payment factory approach, you can take advantage of that. And of course, you get the improved risk and controls that Julio talked about in this.
Mm-hmm.
Would you benefit from a payment factory? There are 8 key considerations we heard about. I encourage you to go back and take a look at those. And then we saw some demonstrated capabilities from SAP. I also want to mention a couple of things real quick. We talked about comply, optimize, transform, but somebody mentioned the idea of mergers and acquisitions. And we often hear customers who put their projects on hold because of M&A. Our recommendation is don't do that. M&A is a great opportunity for you to sit back and take a look at something like a payment factory and see how that would work for you in improving the visibility into cash payments, etc. So to gain the benefits, start now. Don't wait. SAP has some tremendous product offerings in 1909 and even more coming forward. I encourage all of you to check out our other webinars, but also come to SAP Insider, come to SAP Sapphire, reach out to people like myself, Kim and Bramasol and others to help you understand how you can truly take advantage of the tremendous benefits that are available through the new SAP platforms in Treasury, cash management, and risk. With that, I will thank Haresh and the team for this fantastic webinar. I hope everybody here got as much benefit and insight from this as I did. Remember that Bramasol is the leader in business transformation and finance compliance. We focus on procure to pay, cash and risk, and order to cash, and we bring that all to you using the SAP Innovation Platform, which is the SAP HANA. So thank you all very much. I hope you have a terrific day and look forward to seeing you on further webinars. Kim, Haresh, Julio, thank you, and have a great day.
Thank you.